Option trading is the type of trading in which we have to predict direction of price goes up or down within given time. In option trading we can trade for 1 minute, 5 minutes or 15 minutes as per our convenience. But prediction of price is very difficult for beginners without any knowledge of price action and strategies, so I am here to teach you the best strategy I use to predict direction of price with 100% accuracy. Welcome to the channel everybody, my name is Gia. And this is the Trading Secret. A show where we discuss everything about trading to keep you profitable. VSA, Volume Spread Analysis. The strategy I use to win all my trades. Volume spread analysis is the method of analysis that looks at the candle and the volume to determine price direction. It looks at the quantity of volume per candle, range spread, and the closing price. Volume spread analysis trades like banks. Every major bearish or bullish mover has an underlying reason behind it. Volume spread analysis tracks down the professional activity or the moves of the smart money. Supply and demand imbalances, created by smart money, is the cause of price movement. Volume spread analysis can be used in any market like Forex, stocks, indices, commodities, and futures. Volume spread analysis is one of the best methods to analyze a market because it is non-subjective. It is not prone to smart money manipulation, as the method itself is used for detecting smart money activity. It finds the imbalance between supply and demand and the underlying reasons behind the market movements. Let's see the components of volume spread analysis. Spread, which is the difference between opening and closing of the price, then the volume, which is the frequency of transaction of the price change during a specified period of time. Then bearish and bullish volume. Bearish volume is marked in red and it shows bearish activity. Bullish volume is marked in green and it shows bullish activity. Above average high volume. It is the highest volume in the current session, which is higher than the average volume. Average volume is the volume that coincides with moving average 20 of the volume indicator. Ultra high volume. Ultra high volume is the highest volume in the current session. It is higher than the previous peak volume. There are 4 stages of volume spread analysis, based on Wyckoff theory. Accumulation. This occurs when supply and demand are in balance to each other after a markdown move. Markup. This occurs when demand becomes more than supply, causing an upward bullish rally after accumulation process. Distribution. This occurs when supply and demand are in balance after an exhausted markup move. Markdown. This occurs when supply becomes more than demand, causing a downward drop after distribution phase. There are major 2 applications of volume spread analysis, like buying signal and selling signal. Different type of selling signals. Down thrust. Selling climax. Bearish effort less than bearish result. Bearish effort greater than bearish result. No supply bar. Pseudo down thrust. Pseudo inverse down thrust. Inverse down thrust. Failed effort selling climax. Different type of buying signals. Up thrust. Buying climax. Buying effort less than buying result. Buying effort greater than buying result. No demand bar. Pseudo up thrust. Pseudo inverse up thrust. Inverse up thrust. Failed effort buying climax. I am making the playlist of all signals and details, so subscribe my channel and stay tuned.